Hello folks, welcome back to another forecasting session. From the last 2 weeks, the market has moved exactly the same way as I had anticipated in my previous 2 forecasting sessions. You guys also let me know in the comment section how my forecasting, how the analysis is helping you in your trading journey. And yeah, don't forget to like and subscribe the channel. What setups we are having for the coming week, and let's analyze the market for the next week. This session we are starting directly from the gold. This gray shaded area is the bearish order block which the market mitigated, and once it got mitigated you can see the down move with this bearish candlestick. So it was in the daily time frame that the order block got mitigated. Now let's move toward the lower time frames. In the lower time frames, we are having this huge fair value gap. This fair value gap has formed in 4-hour time frame, which the market filled completely last week. Apart from it, the market has formed the ascending channel. And whenever the ascending channel forms, it is a sign that the market will break it to the downside. So our buys for the coming week in the gold will be bearish. We will be looking for short entries until there a war erupts around the world or something unexpected happens in the world. So what can happen in the coming week? There is this fair value gap in the 4-hour time frame. So I am anticipating the market to make a retracement move in the initial days of the week to reach out to this point, this fair value gap, and then from this point the market will make an impulsive move to the downside, and it is likely that the market will break this ascending channel to the downside. So we will be also using the Fibonacci retracement, and we will try to align it with the fair value gap, and once the market makes the retracement move, we will be looking for candlestick confirmation too. We will be looking for bearish candlestick confirmation, and this way we will be having a signal confluence. First of all, our bias is bearish. Secondly, the market has mitigated the daily order block, and the third signal is that the market has filled the fair value gap completely. Our fourth signal will be that the market has formed this ascending triangle, which indicates that the market will break it down and the market will drop. So once the market comes to this area, it will be our fifth signal, and our sixth signal will be the market forms a bearish engulfing or pin bar at this point, and we can also combine Fibonacci retracement with it, which will increase our confidence in the trade. So guys, next week I am anticipating the gold market to break this. The market has formed relative equal lows at this point, and the market knows that there is resting liquidity pool below the relative equal lows. So the market will try to break this relative equal lows area, the 2280 area. So now moving toward EURUSD. And if you have seen my previous forecasting session, my bias was bearish on EURUSD too. So let's see what setups we are having for the coming week. At this point, this is the order block, daily order block, which the market mitigated. Moving to the lower time frames for clear signals, I had indicated this huge fair value gap in my previous forecasting session, and I also instructed all my viewers to wait for a bearish candlestick confirmation, which is this one, which is a pin bar. The market was a bit slow in this particular pair too, but then again the market has followed the direction of the trend. So what happened? The market created these relative equal lows at this point. So let's move to 1 hour time frame to see what are the setups we are having. Okay, so there are some fair value gaps that are left open in the market at this point, which the market can fill in the retracement move, and the market will also take liquidity. The market will try to take liquidity from this high and fill the fair value gap, and then break the relative equal loss to the downside. These relative equal lows to the downside. Guys, never be in a rush in trading and always wait for the signal confirmations. Like, first of all, our bias is bearish in EURUSD, which is our first signal. The second signal will be the fair value gap, the order blocks, and the third signal will be the candlestick confirmation. After breaking the relative equal lows, the market can approach this area, and the market will try to break this key low to the downside, and this way the market will continue its bearish run. Moving towards GBPUSD, this pair has moved amazingly toward the direction which we predicted, which we anticipated in our previous forecasting session, and it achieved the target which we had set for this pair that it could achieve. So yeah, let's see what happened in the daily time frame. And there the market has created a fair value gap at this point, which the market filled completely, and the market filled it completely to tick by tick. And once it filled the gap in the daily time frame, the market created this pin bar, the candle with larger wick, which implies that the market is going downwards. Let's move to the lower time frames to see what happened there and what setups we are having for the coming week. Now look at these 4 hour time frames. We are having some very beautiful market structure at this point. Like, these are relative equal highs. These are relative equal highs at this point. Then what happened? The market went above the highs, took liquidity, cleared the liquidity pool, and took the buy stop liquidity. And yeah, it did stop red, it did stop hunting, and once it did stop hunting, the market made lower low. Then the market made lower high, and then again the market broke the low and made a lower low. So now this structure is showing that the market is in a clear downtrend, and the market can again form a lower high, and the market could continue its down run. At this point, we are having this area and in these three candlesticks we are having the fair value gap which the market can fill. So again, it is not a 100% confirmed signal. What we will do, we will wait for the signal confluence. Our bias is bearish, which is the first signal, and the fair value gap, the filling of this area, will be our second confluence, our second signal. The third signal which we can use is to align Fibonacci retracement with it, and the fourth one, we will wait for candlestick confirmation, which is important of all these signals. So only then we can anticipate the market to make lower lows and lower highs to continue its downtrend. Moving towards AUDUSD, the market was a bit slow, and this particular pair, let me remove it. What happened? Let's move to a lower time frame. First of all, to see that our bias was bearish in this pair too. What happened last week? The market took liquidity from this high. Initially, in my previous forecasting session, I thought that the AUD-USD pair will break at least, let's say, this low to the downside, so it can continue then it will start its bearish run to the downside, but it didn't break the low, and now the market is consolidating. The market is in a state of consolidation. The market is in a side trend. So this way we are unable to predict the market. Anything can happen. It will depend on the fundamental event of the coming week. The market is totally ranging in this area. Here was a fair value gap which the market has created while moving to the upside, and which got filled too. So it is indicating that the market can go to the upside. And what is the other thing that is indicating that the market can go to the downside? That is this high the market has created, this high, which got pierced, and the market took liquidity from this high. Stop hunting happened, which indicates that the market will go to the downside. So now we are in a confused state of mind. We will wait for the market to form a clear setup for us, a clear bullish setup or a clear bearish setup, and only then we will act accordingly. So guys, this was all about the coming week. Wishing you the best to all of you, and see you guys in another learning or another forecasting session. Take care.